I backtested the strategy and found that it has a 70% win rate on the average of a 1 to 5 risk to reward trade and a 90% win rate at an average of a 1 to 2 risk to reward trade. I've backtested the strategy over 200 different trades on gold, and using the strategy I was able to generate my first payout with my funded account that I also used to pass that funded account of $17,875. This is a $500,000 funded account with first-class Forex funds. This payout was approved in 7 days, straight wire transfer to my bank. What's going on, awesome people of YouTube? I haven't posted on this channel for about 10 months now, but I'm back full-time posting on this second channel, Millionaire Mindset Plus, full-time trading content documenting my journey in trading and with my funded account for you guys to watch. And at the end of this video, I'm going to give every single one of you free access to my paid Discord. Just as to show some support to you guys will get free lifetime access instead of having to pay the monthly fee. Make sure to stick until the end of this video so that you can learn how to get access to that. But I'm not going to waste any time. I'm sure most of you before have heard of tradingview.com if you're a trader, or if you've searched up trading tutorials on YouTube. TradingView is where basically every trader on this planet does their charting and analysis, and all trade executions are done on MetaTrader 4 or MetaTrader 5, either on the PC or the mobile version. I usually trade on my phone on the go. When I'm at home on my desktop, I trade on the PC version. So how the strategy works, it's very simple. Supply and demand, structure, and confirm entry. And this is something that a lot of SMC and price action traders struggle to understand. You'll find 90% of people that trade SMC fail at trading because they just mark out any supply and demand zone, risk entry, and hope price goes their way without actually understanding what those supply and demand zones have done and the criteria behind them that makes them valid. And that is the secret I'm going to unlock for you in today's video completely for free. By the way, in the Discord is a full 6-section course on this concept and how I trade. So you're going to get all of that for free at the end of this video. So like I said, make sure to watch until the end so that you can learn how to get that. The first thing I will come and do is come over to the daily time frame, just slight top-down analysis. It doesn't take ages to mark out the chart, and you don't have to sit on the charts 24/7. And the first thing I will do is mark out my most recent daily candle. So let's, for example, just come back one day. I'm going to remove that day. So let's say the day has now started in London session. I will mark out the high and the low of this daily candle. I would then come over to the 15-minute time frame, and my rule is if price breaks above, price is now bullish in bias. If price breaks below, price is bearish in bias. This is your daily structure. So if price breaks to the upside, that's your break of structure to the upside. Vice versa to the downside. So let's continue price and see if we break the upside or the downside. So I'm just on bar replay over here. Here you can see price has now broken the upside. The demand zone that caused that break was this little candle over here. And I'm going to explain to you in a second why. This demand zone is valid for this break because it's the last candle that had the inefficient push before the overall break of structure and the smaller time frame break of structure. So from the daily, I will come over to the 15-minute chart, which this demand zone broke structure on the 15-minute and the 1 hour. And the third criteria is price is building trend line liquidity above this demand for retail traders to be swept out. Remember, a lot of retail traders will be entering, especially on this third tap, second, fourth tap of this trend line with stop losses below. So there is a lot of stop losses over here waiting to be swept, which is fuel for the next move in the market. So let's continue price. And this is where price is currently on live time. So over here, we can expect price to come back and mitigate this demand to continue moving further up. You can also do this on the 2-hour time frame. This is actually my preferred time frame, and I want to show you a live trade I got today. The only indicator I have on my chart is called sessions, D, sessions on chart, which highlights the London and the US session. London being this yellow session, US session being this red session over here. So as you can see, what I'll do is on the 2-hour time frame is mark out my 2-hour candle just before session start. Come over to the 15 minutes, I will wait for price to move either above or below. Price is now broken below. Price broke structure to the downside. My valid supply zone would be this wick zone over here, because this wick zone was the last move that had the break of structure on the smaller time frame on the 15 minutes, and the hourly and the 2-hour time frame, our higher time frame structure, with liquidity points and inducement just sitting below it. I'll then come over to the 5-minute time frame to refine this zone, which is this zone over here, and this zone is actually an equilibrium zone, because the wicks of this candle, this entire candle, the wicks is bigger than the body. Whenever you highlight a supply or demand zone, and if the wicks is bigger than the overall body, this is an equilibrium zone, which meaning mitigation is only valid and fulfilled at the 50%. So you'll see over here, price mitigated the supply, but this is not a mitigation because it didn't mitigate the equilibrium, the 50%. So therefore, I waited for price on the 5-minute to tap in. And as you can see, some more liquidity buildup. So I set my sell limit, stop loss above that high, TP at a lower low, as per our bias, expecting price to create lower lows. My partials was at this low point over here, also at 1 to 2 risk to reward, being partials. So this was a total of 1 to 6 risk to reward trade. We then tapped in this trade. Price came to BE, and we collected 0.3% on the $500,000 account and set BE to the rest of the position, and the rest came back to BE a few minutes later. So this was a good trade to start the end of the week, and this was most likely my last live trade of the week as well. I'll take you over some more backtesting trades now. So then I came back over to the 2-hour. Let me just remove these drawings. Highlighted my previous 2-hour candle. Come over to the 15-minute, and you can see price is now broken above the 1-hour structure. The demand zone that caused that break is this demand zone over here. So if I highlight this as a demand, we can then come over to the 5-minute to refine the zone, which specifically I will take the zone over here. As this 5-minute zone is your refined 15-minute zone that caused the inefficient push, the break of structure to the upside on the lower time frame, and the overall 1-hour time frame. I would like to see some more liquidity build above the zone. For example, double bottom liquidity, where there's a support line with a lot of retail entering, for stop losses to be swept to tap into the demand and continuing its bullish push upwards. If price comes to this demand, breaks this demand, that would be your change of character to then look for shorts to continue lower. So this is my current bias and plan on gold live time frame. I do expect gold to go up more, especially with all the news on the US dollar. When the US dollar crashes and comes down and is bearish, gold is bullish. So if you take a look at Euro USD, how bearish this market has gone the last while, take a look at gold. Gold has been extremely bullish while the US dollar is bearish. So gold is usually the opposite of the US dollar. And there is indeed some nice liquidity starting to build for the zone. As you can see over here, there's some taps filling up over here. So there's definitely lots of retail traders entering here with a few stop losses. With a few stop losses sitting here ready to be swept. So let's just wait for some more liquidity, and then we can look for entries and longs from this demand zone. Let me take you over yesterday's trade. So if I come over to the start of this day, I'll take that candle just before London session started to the 2-hour time frame. I marked out this 2-hour candle, which is my 2-hour structure. Come over to the 15-minute, waited for price to break below or above. The next candle, price slightly broke above, which is a break of structure for me. I then highlighted this wick zone, because this wick zone was the last move before the inefficient push with the imbalance, the break of structure on the lower time frame, and the break of structure on the higher time frame. Therefore, this demand zone would be my valid demand zone. I'd like to come over to the 5-minute just to see if we can refine this. This is still a wick zone, so let's let price play out. some liquidity build-up building for this zone. So I therefore, this is quite a big zone, so I entered on the 50% just for a tighter stop loss and better risk to reward with 11 pip stop and a 70 pip TP. So this is a 1 to 7 risk, 1 to 6.1 risk to reward. Waited for price to tap in. My BE in partials was at this liquidity point over here, and also 1 to 3 risk to reward, which we tapped, and we ended up having a full runner straight to TP2. So this was yesterday's trade. I took one more trade after this. I came back over to the 2-hour time frame, moved my structure up to my next candle, like that, back over to the 15-minute time frame. We waited for price to break above or below. There's your 15-minute structure. There's your 2-hour structure. Price broke above on this wick over here. This was my demand zone that caused that break with the inefficient push, the break of structure to the upside. I then came over to the 1 minute just to look for some more perhaps refinement. My refine zone was this zone over here. It also lines up with the equilibrium and the 50%. So I waited for price to come back. Liquidity buildup, mitigated this zone. Waited for price to have a change of character, which just slightly caused that change of character. This was my weak zone. So I took entry from this zone. Stop loss at about 8 pips just to cover for any sweeps. Targeting a 1 till 5 risk to reward. Price tapped us in, broke a new high and hit full TP. This was my second trade of the day, and I was done for the day after this trade. What I love most about this strategy, your risk to reward is really fantastic. I catch anywhere between 1 till 5 and 1 till 11 risk to reward trades, which means, let's say I'm running an average of a 1 till 6 risk to reward. If I lose 4 trades in a row and my 5th trade can be a full runner win, I'm still profitable for the day because of that strict stop loss and risk management. And this is something that a lot of traders don't understand when starting trading, is risk management and building up that percentage on your account per day. I, on average, risk 0.5% of my account per trade. That's my $500,000 account, which means I risk about $2,000 per trade for a target of anywhere between $6,000 and $15,000, which is a 1 till 5 till 1 to 10 risk to reward. So in a nutshell, just to recap, marking out your 2-hour structure, break of structure to the upside, your bias is bullish. Look for the zones that had the inefficient push, the break of structure on the lower time frame, and also is building liquidity above or below it. I go over this very much in detail in the Discord that you're going to get access to at the end of this video. So I really recommend that you stick until the end, which basically concludes that video right now. So if you guys want to get access to this Discord completely for free, there's no free trial, no nothing like that, I want you to come over to the second link or the first link in the description. There is a link to my Instagram. Just send me a message on Instagram saying you saw my YouTube video on Millionaire Mindset Plus, and I will send you your private invite link to your DM, which you'll be able to join the Discord over there. So make sure to go click on that link down below. What I also recommend you do is follow my main channel for tons of more content. I'm going to be posting there now, and also have your bell on for this channel because I'm going to be posting nearly every day for the next few months. So without further ado, take care guys, and I'll see you in the Discord.